Welcome back folks for this week's price action trading levels video, 3rd of November to 7th of November. So starting off here with EURUSD, you can see this level here, 125.055, more or less 125 level, where the price has obviously bounced from, as it did just here. What you're looking for here is a nice bullish candlestick to indicate that this is going bullish and can trade this back up to 127.80. If we go back on the chart, just make it a little bit smaller here, you can see this previous level just here that acted as a resistance and support zone back in the past, back in September 2012. And if you also look at this level here at 127.80 and go back, you can see here where it's providing a supporting level just here. So it stands to reason that if the price comes back up to the 127.80 level, that could be a place where there's sellers sitting waiting to sell this back down. So let's just zoom back in. Our level, we're at it now, 125.055, looking for a bullish candlestick, and our sell level 127.80 on EURUSD. Kind of a similar looking picture on GBPUSD. Levels here 158.97 and 161.49, but it is in this sideways range, quite a big range, but it's still travelling sideways. There's no upward trend or downward trend right now apart from this here, which is obviously a bit of a downward movement. If we flick to the weekly chart on this, you can see these levels here, previous levels back in October 2013, where the price found resistance just along here, and it found it again back up into here. So you've got to wait for this. If you're just going to trade this on the daily chart, you need to just wait on this, wait for these levels here to show us, you know, a nice bullish candlestick from here, or a bearish candlestick from here, or breaks, and confirm breaks to trade this either direction. So if we break under here, wait for the price action to confirm. If we break above here, wait for the price action to confirm before going long. Just put that back to the daily. Yeah, there we go. So if we were to look to go long, if this broke this level and confirmed it, then your next level of possible resistance is 163.86. Trading this long out of here, but you've got to wait for it to confirm. It's no good just trying to go long if it breaks above it, because it might be a false breakout like all these were here. So GBPUSD 158.97, 161.64. Now we're getting into the yen pairs, which went a bit crazy last week. EURJPY here, see this big old candle. This was a break of the 140 level, 139.90, pretty much 140. You can see here it had previous resistance just here. It sliced totally through that. So the next spot is 141.21. If you're looking above, where you can see here it provided previous support just here, and it's now provided resistance here. So look at 141.21 as a spot to get to if it carries on charging up here. Now the thing with these big candles is if you want to trade these to get long, you're going to have to switch down in time frames, 4 hour, 60 minute maybe, to look for pullbacks to trade these back up. But on the daily chart, your levels are 139.90 and 141.21. Okay, here's USDJPY. Now this is, I've left last week's analysis on the chart here to show you what we were looking at last week. What we were looking at last week was selling down from this zone here. Now obviously due to the news, which has caused all these big spikes, especially on the USD base pairs, the FOMC last week, where they removed QE, you can see that the USD has just gone into craziness, spiking this up here last Friday by sort of 346 pips. It's a big old move. Now I'm just going to give you a quick indication on how to trade price action. If you look at this zone here, which I marked on the chart last week, you can see here as the price left this zone here with this green candle with a pretty decisive candle. It'd be nicer to have it a little bit bigger, but it's a pretty decisive candle, which meant that when the price came back here, you could have had, I don't know, some sort of limit order here to buy this at this level with your stop underneath here. Now, if you look at the candles that left the what's called the supply zone on the 3rd of October, you can see that they weren't as strong as this candle here that left here. So that indicates that yes, there were sellers here to take this back down, but the sellers weren't as strong as these buyers. So you wouldn't have had a limit order here. So what you would have been looking for was some sort of price action candle to say we might be able to sell this at 108.89, and you didn't get one. The price just went into the zone, and obviously the news took it straight up through. But what you need to look for when you're getting into these zones, if there isn't a strong previous exit from the zone, is a price action candle, something, you know, with wicks on it, something that's engulfing, to tell you that there's a good chance that the price is reversing at this spot. But I'm just showing this here so you can understand the importance of, you know, watching your candlesticks when the price gets back up to the levels, if you don't have a strong previous candle exiting the zone. There may not be so many sellers here as there was here, and you know, the price just sliced up through it. So on to this week on USDJPY. Myself, the way this looks right now, I'd probably stay away from it. I need to see levels being created. I need to see this pulling back and actually showing us what's happening on the chart. Now this zone here, which started at 108.85 and went all the way up to around 110, the 110 level, this was obviously a supply level. Now this has been broken, so this level could turn into a demand level or a supporting level in the future. But at the moment on USDJPY, if I really wanted to trade this, I'd be dropping to 4 hour or 60 minute, looking to see if we got any pullbacks with some price action candlesticks within that. But it's very difficult to trade, because if you look at where we are, you know, on the monthly, we've actually broken this high on the monthly, and we're into this high here on the monthly. So the only level really further up is 11468, so that's another 200 pips up. On the weekly, it's not going to look much better, possibly just there, 11063. Let me just put a line across there, switch back to the daily, see where that's sitting. See, and that's even that one, that's been blown away as well. So for USDJPY, leave it alone until you start seeing some pullbacks into some levels, and you know, we get some levels created here before thinking about trading this. Unless it drops back down quickly, then you've got possible long out of the 110 level. On NZDUSD, this is what I was talking about on the previous pair, where you get this fast exit from a zone. See how many sellers there were in there to drive that down out the zone. It may well have already reacted just here. It was pretty close at the zone, so this may have been the sellers getting back in here. But in any case, you can still look to 80.50 level, 80.49 just here, if we get a bounce up to here, for some more selling opportunities if we see the right candlestick just up here. Where we are now at 77.50 or 0.7750, we're sort of bouncing off this level, and I would want to see some sort of bullish candlestick, or a possible proper test of this level, and then a bullish candlestick to trade this back up. If this downward price action here, this is obviously downward price action, carries on and we break this level, and then wait for the level to be broken before taking a short under here on the confirmation, wait for it to break, pull back and test it to show that this level has changed from being support to resistance, then you trade it short. But you don't just jump in when you see a candle break it. You need to see the confirmation, because it might well break it and then just immediately plop back over the other side and put you in a whole load of aggravation. So for NZDUSD, 0.7750, and if we get up there, 0.8050. On AUDUSD, sideways movement here pretty much last week. Some reasonable sized moves, but it's sideways at the moment. Now if you look at this zone here, where the price previously left it with this candle here, this is a supply zone. Note how the price left it here, came up here and then left it again just here, and the actual price, let me just bring that up a bit bigger, nearly broke the other side of the supply zone before it dropped. And then the next time it came up, it touched it and dropped back immediately down. But then this one here, you can see that the price has made it to the other side. Okay, it spiked back down, but now it's going sideways, which means that the buyers and sellers here are in balance. So there isn't the same amount of sellers just here as there was just here and just here. You can see it's gone further and further into the zone. So for Aussie dollar, I'd be looking at 90.26 as my spot to sell down from. This is on the daily chart, the daily supply zone. You can see here it's an untested level. Price left it quite nicely there. If we come back up to it here, I would find it most likely that there will be sellers waiting there to sell this back down. In the interim, back down to the top of this zone here, 88.97, the 89 level. So for Aussie dollar, 90.26 to sell. To buy, it's got to drop down to this level here, 86.81, but it's also had multiple goes at that level. Now it might bounce out of here, but you need to watch the candlesticks here for your price action before you go long, or watch to see if it breaks under here and confirms before you go short. So on Aussie dollar, 90.26 and 86.81. On EURNZD, you can see here it's stuck in a sideways range, a big sideways range of 247 pips, but from a daily trading point of view, it's stuck here. This, you see here, this was previous resistance just here, turned into support here, and then it's come back up here to this level here at 162.049, and it just can't get through. Lots of wicks going through it, but nothing clearing it and retesting it and pushing the trend on. This is what I'm on about when I say make sure you get a confirmed break, because if you were to trade this, then you're going to get caught trying to get long on just these breaks of it. This is what catches you out. So you need to wait for the confirmation break, retest, and then you go. However, that's not to say this pair isn't tradable. We have been trading it in the trading room on our 15-minute strategy, and it's worked out really nicely. However, on the daily, you can see that it's sideways. You've got these two trend lines here holding the price, and really you've got to be looking from a daily point of view to have one of these levels broken. You can't sort of trade it in here on the daily. You've got to look for either 159.54 to break, confirmed break to sell it down, or 162 level to break and confirm to buy it. So on EURNZD, from a daily point of view, just sit on it and wait for these levels to be reached and possibly breached. On USDCAD, the resistance level was 1.1296, which the price repeatedly tried to get through, just here, bounced off it here, and then traded back down to 1.1123. It's had another go on it here after the FOMC news on Friday, similar to the other USD based pairs that went up, and it's been resisted yet again at this level. This level will break at some point, so I would look to wait for a break of this level at 1.1296 and let it confirm, and then continue with the long price action from here. If we get this dropping back down, then obviously you've got this trend line and the support level just here at 1.1123. So look to this trend line, see what happens if we drop back down to here, see if we get any nice price action candles to go long. By price action candles, I mean candles like this, bullish engulfing, or perhaps this, bullish hammer, or maybe a spinning top like this, or a doji. So wait, if it comes down to these levels and you see any of these candles, then look for getting long from the trend line or this support level here around about the 1.1144 to 1.1122 level, with obviously a stop under here somewhere. This is for the daily chart or the daily time frame. So on USDCAD, 1.1295, 1.1122 to 1.1144 your places to watch on this pair. Here's the news list and data releases for next week. Have a quick scan down here. Notable mentions: RBA rate statement on Tuesday. This is their interest rate. That's a big one for the Aussie dollar. On pound on Thursday, official bank rate. So that's the big one for the pound. Whether or not they change it from 0.5, I don't know. Probably won't, not before Christmas. And on Friday, the USD big one, which is the non-farm employment change, which we recommend that you don't trade anywhere near that. Very, very difficult to trade. Even if you do get in a trade, it's probable that you're going to get a widened spread. You'll get a worse entry than you thought. It'll just be a nightmare if you try and trade that. So stay out of the markets on Friday around the non-farm employment change. So that's it for this week's price action levels and a quick look at the news. If you like what we do here, please send us a comment, tick the like box or subscribe to the channel, and we'll see you next week.